Good morning, everyone. It's really a pleasure to be here with you, and I would like to welcome you all to today's discussion, which will focus on the resilience of the banking sector, especially in the current geopolitical context, which is full of challenges. I'm Christina Papaconstantinou, Deputy Governor of the Bank of Greece, and I'm here with Dr. Korbinian Ibel, who serves as Director General at the SSM, the Single Supervisory Mechanism. He's in charge of supervising universal banks and diversified lenders. He's also a member of the Basel Committee on Supervision. He's co-chairing the Basel Policy and Standards Group. Korbinian, he joined the SSM in 2014, 10 years. Same period as the 10 years of the Delphi Economic Forum. So, I mean, that you go together with that. You were before Director General in the directorate that had to do with macroprudential supervision, always at the SSM. And Korbinian, he has also a very extensive experience in the private sector. So it's the good combination of private and public sector. He has worked at Commerzbank, in various positions as head of treasury, among others, CEO for in different roles, and also you have worked as a consultant in Accenture and the principal at Boston Consulting Group. I don't need to remind you all that the Single Supervisory Mechanism refers to the system of European banking supervision, and it comprises the European Central Bank and representatives from the national supervisory authorities of the participating member states. So, without further ado, let me go to my first question and ask you, Korbinian, if you allow, how are things right now in the European banking sector? Are banks, European banks, more resilient compared to the past?
Yeah, thank you, Christina. Thanks a lot for the nice introduction, and thanks for the question. I mean, when we discussed about the topic for this discussion a few months ago, we did not know that it would be so spot on with the current developments. And therefore, I think it's really important that we take a look at the Eurozone banks. This is the Eurozone banks that we supervise together. And we have to say the banks have improved their resilience, built it up dramatically and greatly. So if you think back these 10 years ago, you might remember there was lots of crisis, lots of banks in crisis. There was high non-performing loans. Capital was tight, at least in some corners. And since then, if you just look at the numbers, NPL ratios, for example, came down from an average of 7.5 to 2.3. And let's not forget, also with the 7.5, there were lots of countries which had basically zero NPLs, which just reduced the average. So this is really an impressive development. And also, if you look at the CET1 ratio, and you know, this is basically what makes banks safe for unexpected risks. And it went up from 12.7 to 15.9%, and 15.9% is really also internationally, if you compare it to the US and other countries, a very, very high and very good number. And it really shows how resilient the banking system is. And we all saw it. We saw it when COVID came, the Ukraine crisis came, when Silicon Valley Bank crisis came. Always the European banking system proved to be very stable. Even if banks in other jurisdictions began to tumble, the European banks all stood very clear. There was no taxpayer intervention necessary, nothing like that. And I think that's a success of many factors, because, of course, of macroprudential conditions, but it's also because the banks learned, I think, a big lesson in the great financial crisis, and also because regulation helped a lot to achieve this level of resilience and this level of trust in the banking system.
So, I mean, we can say that to a great extent, all this success is also attributed to the European banking supervision system. I think that we need to praise ourselves. What about banking in Greece? What about the Greek banks, the situation as it is right now? And how do you see all these developments that they have, let's say, happened in the Greek banking sector?
Yeah, I think the Greek banking sector, and I also have here a few data for you, is basically even more impressive than the Eurozone banking system as a whole. So what you see happening is that NPL ratios come down from more than 40%, if you would go even back more in time, to now levels that are very similar to the Eurozone. It's still a bit higher, so there's still something to do and to be done. But it's so much better than it was ever before. And if you look also at profitability, the Greek system came from high losses now into a profitable banking system, and profits is what generates the capital of the future. So clearly, the banking system in Greece has done an incredible turnaround. I think this is due to many factors. One factor is for sure that the governance and the leadership in the Greek banks has improved dramatically compared to before the crisis. It's also based, of course, on the Greek state doing very smart interventions, for example, on the NPL relief. It's also based actually on monetary policy, so the interest rate hikes for sure helped a lot to achieve this. But in the end, whatever factor it was, is not so important as the end result. The end result is that in Greece, I would say have a more stable banking system than I guess at least in the past that I can remember. And I think this is a success that people in Greece should be very proud of, and the banks should be very proud of. And I think we as supervisors can say we are also proud of.
Absolutely, and as you said, it's the result of a joint effort. But I mean, what are the challenges ahead? And also, what is the best way to deal with them, to address them? I'm referring now to the Greek banks, and maybe then we can pass in a more broader context.
Yeah, I think this is the most important topic, right? To celebrate the past is one thing, but we need to be.
We need to do it.
We need to do it, and we have all the rights to be proud. But now comes the part, there's always a new crisis. Yeah. And in the current situation where we see that truth messages on his social platform change stock markets of 10% volatility within a day, something that was not seen ever before, I think we need to make sure of one thing, that banks are resilient. And for banks to be resilient for geopolitical shocks in the future, we have developed a house of resilience, and this, what I show here, is the house of resilience. And this is what every bank needs to do to be sure that in the crisis to come, that they are safe. Because the issue is, as a bank, you do not know where the crisis comes from. You will see a geopolitical shock, but a geopolitical shock always translates into some form of financial risk or operational risk. So just that stock markets have a high volatility does not necessarily mean that this is dangerous for a bank. It only becomes dangerous if there's a transmission mechanism into the bank's balance sheet. So if you do not know exactly what to do, how to hedge, how to protect, what a bank needs to do is it needs to basically make sure that its banking model is resilient. And what does that mean? And here you have the different factors that help. The first one is sufficient capital buffers. We as supervisors give certain, and regulation gives certain minimum capital requirements. But that's of course not enough. Some of these requirements serve to protect the taxpayer, protect the depositor. But that's not the goal of a bank. The goal of a bank is to survive and to be able to finance the economy even in bad times. And to be able to do that, the bank must have sufficient capital buffers to continue to finance even in situations where you have losses that you have not foreseen. And these losses might come from very different sources. So the capital buffers is there to protect from unexpected risks. So banks need to continue to have these buffers to not pay out everything to their shareholders, to keep a little bit of powder dry, to be able to bridge whatever crisis there might come for a certain period of time. And this period of time might be needed to recover, to clean up the balance sheet, etc. Which brings me to the second point, clean balance sheet. Now, currently, we have a profitability in the banking system that is higher than we have seen for a very, very long time. This profitability must be must be used. Must be used on the one hand to show to investors, and that is clear that banks are a good investment because this is where there comes the growth and capital in the future, but must also be used to clean the balance sheet. They are still legacy assets. They are legacy assets also in the Greek banking system that need to be cleaned up as soon as possible before the next crisis hits. And there's credit underwriting standards. So credit underwriting basically determines the NPLs, the non-performing loans. The credit underwriting standards of the past determine the non-performing loans of today. And here I can say that the Greek banking system did very well because we did a study in 2019 comparing the credit underwriting standards of all Eurozone banks. And Greece, coming out of the crisis at that point in time, had among the highest credit underwriting standards in Europe. And that, of course, is also a reason why you saw before this nice decline of non-performing loans that the Greek banks benefit so much of today. But Greek banks need to be very careful about credit underwriting now, today, to make sure that they are protected from the non-performing loans in the future years. And this is where we as supervisors have intensive discussions with our banking colleagues to make sure that this is kept also in terms of former non-performing loans, etc. This is absolutely essential. So cleaning up legacy, credit underwriting is what you do for the future. And then we have here good profitability. Now we all see the bank's profitability is excellent these days. It's very good, and that is positive. But a lot of this profitability, there's always a little but if you're a supervisor, comes from increased interest rates. And these interest rates are, of course, totally out of the control of the bankers. And we need to make sure that banks keep profitable even if the interest rates go down, because nobody knows if they go down and when they go down. Now, what is the part of the equation that helps you being profitable even if the income goes down? It's cost management. And of course, especially in years of higher inflation, a good cost management is super essential. So we really encourage banks to be very careful about high cost increases in these times if it's not investment that helps them to have a high profitability in the future. Good cost control is essential in times of profitability, even if there are lots of people that might get greedy and think now is a time to finally pay a bit more. We can only encourage banks to be very careful and not to do that, because this will protect them in the next crisis when income streams suddenly reduce. Now, in the baseline, you see in this house, basically the base, this is high operational resilience. We have now seen with the crisis coming with Ukraine war that cyber attacks can become more intense, but cyber attacks is only one part of the story. The other part is that banks have to become more digital, because only by becoming more digital they can keep their cost-income ratio at bay. Now, a more digital bank also is more risky in terms of operational risk. And many of the instances we see in banks is not external cyber attacks. It's in reality some release upgrade, some internal data management error, and this is what blocks banks nearly as much. Which means you cannot be protected against all accidents or attacks, you never can be. But you have to have a high resilience. That means you need to be able to recover quickly, to have enough backup sites, to make sure that the backups work, to make sure that you can come back live very quickly, even if you are stopped for a while, for whatever IT reason there might be. So this is high operational resilience. It stretches a lot of different things, a lot of aspects. It stretches into outsourcing, it stretches into cloud computing. Banks need to make sure that they have the possibility to come back from accidents. Now, and then I put some things below that are maybe not so relevant at first sight, but become relevant on second sight. One is liquidity. Currently, there is no liquidity stress in the system, but it could come back. And then what banks need is sufficient contingent liquidity, that they are able to generate liquidity very quickly in times of stress situations. also in different currencies, because for some banks this is an issue. And then I wrote here, avoid open positions in IRBB and market risk. We have seen in the last couple of days how volatile markets can get. And of course, if a bank would have large open positions that are unhedged, that would have been not such a helpful idea. And IRBB, interest rate risk in the banking book, that is also something where, as we do not know where interest rates develop, I think nobody knows in these volatile times, you need to be very careful about open positions there, because this was one of the drivers of bank failures in the past, when banks were not sufficiently careful about that. And this is the house of resilience.
Yeah.
And I think if bankers do that, we can all sleep well and have a good life and relax and have an economy that is well financed.
So, I mean, find the right balance between being prudent and proactive at the same time. I think that's the key in whatever policy is to be followed. So, I mean, I think that you would agree or not with what it has been said, that crisis is the new normality. You know, yesterday when I was thinking a bit, I was trying to prepare myself for our discussion. Yesterday's events were full, let's say, influenced by the Trump administration decisions on the imposition of tariffs. And then again, in the evening, the whole situation changed. You mentioned volatility. So I was wondering, this factor of continuous uncertainty, how can one be, let's say, prepared to overcome it? Because, I mean, uncertainty, I think it's fair to say it's the main characteristic of the situation as it stands right now. And it's not exceptional, so it's not exceptional uncertainty. It has the tendency of becoming something more stable than that. So whatever you have, let's say, presented as way to address, I think it becomes even more pertinent right now.
No, exactly. I think you're spot on with this analysis. I mean, this is, if you see a risk and you know that, like interest rates, you don't know if they go up or down, but you can still manage because you know it's interest rates. Then you can basically hedge your position and keep it flat. Or if you think that interest rates might go down or not, then you can do options to hedge your interest rate risk. But in the current situation, you do not know what happens next. You do not know whoever comes up with a reaction that has a geopolitical dimension tomorrow morning. If you do not know that, and you still want to do business, because of course you could stop all business, that makes you safe, but that does not help anybody. But if you want to continue to do business, I think you need to follow this house of resilience very tightly and very stringently. You need the capital buffers.
That's the Bible.
You need the clean balance sheet, and you need to use the profitability you have today to make sure you keep profitability in the future. You need to check your cost, and you need to invest in your resilience. And if you do all these things and don't have open positions, I think our banking system will remain safe. We will see that our regulation, that is for sure not loved by everybody, but it helped to create this resilient banking system. And I can just say, when the SVB crisis hit, and the European banks were not hit by that crisis, and they were stable, that improved the image of Europe in the world, in the world of banking supervision, in the bank of banking supervisors, so much that if you follow also the stock market development on banks, you see after that, shares of banks gained a lot of more value. That was not only because the profitability went up, that was also because investors said, oh, this banking system is now resilient against shocks and against different shocks coming from different basically perspectives. So whether that was Ukraine, COVID, SVB, that gives trust. And I think banking is a clear trust industry.
So, I mean, you're saying that both credibility and trust play a dominant role in how also supervision is, let's say, implemented.
I would say 100%. But it's outcome-based. I think outcome-based means the next crisis that come, we need to show that also in the next crisis, the European banking system, the Greek banking system is resilient, that we don't have uncontrolled failures. And if we show that again and again and again, there will be coming so much trust into the system that will have then, I mean, it's like a positive circle, right? There's trust, then people are willing to give money to the banks, funding costs go down, which make banks more profitable, which leads to people having more trust, and so on. So it's a positive self-enforcing cycle that we are here on.
And a continuous process.
Exactly, and this is why it's so important to keep the resilience and not destroy this positive momentum by now big trouble in any banks. I think this is why if bankers would follow this house of resilience, and I think they do automatically, we will continue with this good cycle, with this good momentum for the European banking system.
In a way, whatever you have described is also the result of a common effort, common supervision, joint supervision, and I think that we clearly see the results right now. So my question would be to you, and I think this is a good opportunity to have you here. How much more Europe do we need? How far do we need to go with banking union, with capital markets union, with all these kind of issues that have been on the table for many years now? And maybe this is now the moment to make further progress in order to bring concrete solutions to problems that have been identified and diagnosed for years, but we need to be a bit bolder in the way to address them. Jointly, I mean, at the level of the EU and the Eurozone, of course.
Absolutely right.
I mean, you work for a European institution, you have to be in favor of that, but I mean, as a citizen as well, I'm sure.
No, as a citizen as well. Now, I think the SSM has shown that this cooperation between a national authority and a European center helps to really improve the way for supervision clearly, because we have local knowledge, local expertise, and we combine it still with a more European holistic view. So we have better benchmarking, better data, better knowledge. We can pool experts more than any national supervisor could ever have done. So this, I think this success model that now helped to make the banking system resilient, it would be lovely if this would be transformed also or transposed to other areas, whether that's capital markets union, whether that's other areas. So I think if you look at the current world, it's totally clear that no national state can really
be on their own. Yeah.
Exactly, we need Europe. We need to stand together as Europeans, and we need to be willing to move forward with Europe. And I think the SSM, the European Central Bank, are symbols of this is a successful strategy, and we just need to roll it out into more areas, and quickly, because the world is changing so quickly.
So we can use the SSM example as a kind of a precedent and a living proof that things are always better when we act together.
I would hope so. But of course, it's for others to judge. I mean,
but how, let's say, to what extent do you think this has been realized at the level of, individual member states? How, and this is, an open discussion. You can be as open as you want. But to what extent do you think that also politically this has been fully digested inside the different member states? And how far are they ready to go? In order to find the national. Let's say, the balance between their national interest and the European interest?
I think, honestly, to answer that question, I'm not the right person, because we should have asked the former speaker, who was a finance minister, what he believes, how far are the countries to go. I can just say, I think we, from a European services side, from European public servants, I think we would be ready to, of course, do much more for Europe. We believe that this is the way to go as public servants. But we will do, this is a clear democracy, exactly what the political bodies ask us to do. But I think the question of how far is Europe in that, this needs to be answered by people in charge of the governments who are elected officials and not like me, a public servant.
Still, our experience can be quite useful.
I would hope so, that they see it as an example.
It can be set as an example, I totally agree. Let's go back to supervision, and let me ask you, right now there is at the level of the SSM, it's a discussion that we're having also at the supervisory board, there is a big, let's say, plan, a big supervisory culture activation plan with different elements that would allow a more efficient and a more effective SSM. Mm-hmm. How do you see it as an insider? How do you see it from, let's say, your role as Director General in an institution that has contributed to that?
Yeah. So the experience of the past 10 years doing supervision is one big element is between the national authority and the ECB, there must be full alignment. Mm. Only if we are fully aligned, we have really impact on the banks. We have achieved that in Greece, I think, to a super high degree. And I think the bankers in the room will realize that there is no way to arbitrage us from each other. This success model of being fully aligned needs to be nurtured. You need to have a common culture. You need to invest into that. You need to invest into the alignment between the people, that you understand each other, that it's clear that we can trust each other, that we have the same goals. And I think for this program is a good program. And it will never stop.
Yep.
I think we need to continue doing this cultural development, this working together, this meeting, talking, exchanging views, being able to openly discuss, being able to agree to disagree, and then to find a common solution. I think this is what makes us successful as a supervisor.
So no backtracking on whatever we have built, but a more, let's say, continuous effort in order to go to this, let's say, direction of a common culture.
Let me share one, I think, interesting element here. What helped in the integration of the SSM, the single most important element, at least for the part that I'm responsible for, was COVID and the lockdown.
Yeah.
Why was COVID and the lockdown a positive element for integration? Because we work in Frankfurt in the central bank and, for example, in Athens in the Greek team. In former times, people have been sitting in one room in Frankfurt and other people have been on a telephone in another room with bad audio quality. And then when the meeting ended, people basically stopped the meeting and continued to discuss, both in Athens and in Frankfurt. And that was very, very bad because then information was not fully shared. Then the lockdown came and everybody was sitting in front of a video screen. The meeting ended when the meeting ended. And everybody who wanted to talk, talked. And everybody heard the same things. For me, I took over a new responsibility in this time. I didn't even know who was a member of the European Central Bank and who was not. And that led to a fully level playing field between the different countries. And that was a total booster in terms of more integration. This created a really common culture, an openness that we would not have achieved before. This is why we nurture so much to continue in this way of working, because it puts all of us on the same base, and then we can really achieve to make the best of the expertise in all the different corners we have. I think these little things in terms of culture are more important sometimes than many other things that might be more obvious and more visible, but that have much less effect on people and their views and their thoughts and beliefs.
I couldn't agree more, and I think that with this optimistic remark, we can conclude our discussion. Thank you very much, Korbinian. Thank you very much also for our cooperation. Thank you.
Thank you.